All right, so we're just about at the halfway point of the year right now. The start of the second half actually starts tomorrow. And you sent us what's your S&P 500 year-end targets. Now, I thought this was pretty interesting. Your base case, you give us a bull and a bear case as well, but your base case is 6,300. That's just about a 1% rise from where we're at right now. Why only a 1% rise? I mean, what do you see happening? What sectors do you see moving higher, perhaps moving lower? Does everything just move sideways?
Yeah, look, here's the thing. You can get to 6,300 with everything not moving sideways. We're still really optimistic on growth. And honestly, that's tech and communication services here. We don't really love the cyclicals or even the defensives. But why 6,300? Because that's fair value when we look at the earnings growth opportunity for the S&P 500. What's happening now with sentiment getting stretched, you're kind of adding some extra points to what is fundamentally justified. That's why we have the bull case of 7,000. If cyclicals kick in, if people feel even better about alleviating some of this uncertainty, that's how you can have an overshoot of fair value for the S&P 500 at a price level.
All right, let's get to the areas that maybe you're a bit more bearish on, because just as you said, some things can go up, some things go down. What do you see potentially being under pressure for the rest of the year if we go back to your base case again of 6,300 for a year-end price target on the S&P?
Yeah, look, it's heavily consumer and heavily cyclicals. So consumer staples, not a lot of margin wiggle room if anything goes wrong. Even trade down for a lot of those companies is going to hurt your earnings power. Consumer discretionary, you might have to really wait to see rates move to get increased spending on that side. In industrials and materials, if there's any slowdown in global trade or just delays in global trade as we try to get through a lot of these trade deals.
All right. I want to go to your bear case as well. Your bear case is 5,200, pretty sharp drop from where you are at all-time highs. I want to play this soundbite from Raphael Bostic, the Atlanta Fed president, speaking to our colleagues in Europe about tariffs, and I want to see how tariffs potentially factor in to your bear case.
The textbook story for economics is if you do tariffs, it's a one-time shift. It happens quickly. What we are seeing today, though, is not just a one-time shift. It's actually something that's being stretched out over a much longer period of time. I think that runs the risk that people start to feel like inflation is always with them. This elevated level of inflation is always with them. And that then runs the risk that there might be some structural changes that businesses and consumers, for that matter, make.
So, Drew, how concerned are you about inflation overall and just the impact of tariffs when it comes to that?
Yeah, it's funny. It's actually not an inflation concern from us from an equity standpoint. It's a margin concern. So what's interesting, when he's talking about inflation being a structural problem or a headwind, that's kind of what would happen with margins if we have massive input price increases. So if we're going to reset margins lower, that's going to put more pressure on companies to be more productive and find ways to grow earnings. So yeah, secular trends and growth, totally get that. But again, cyclicals where we're concerned, it's that structural dent to margins that gets you to a more bearish scenario for the S&P 500 and a lot of its underlying companies.